Okay, so it is our first class, and I cannot tell you how excited I am to be here with you, to see your faces, and to know the victories that you've had even before the first class. And honestly, it just blows my mind, and I love seeing how excited you guys are. So today I will give my disclaimer. I will have a portion on mindset. Then we're going to go to some foundational things for trading, and then we'll have practicals. That is our class setup for today. And at the end, we're going to save a little time for Q&A. Typically, our sessions will be about 60 minutes, but I always like to leave a little leeway because you never know what's going to happen. If you need to jump off at that 1 hour mark, it's okay because we are recording. So, number one, disclaimer before we dive in, I am not a licensed financial advisor. I'm not a CPA, I'm not a guru, I'm not a rabbi, I'm not a priest. I'm a mom, but I'm not your mom. So I don't get to tell you what to do. But what I can do is share what I've learned. I'm going to share what's worked for me. I'm going to give you some solid ideas and tools to think through. And don't take anything here that I say as financial advice. It's not. It's education, it's encouragement, it's coaching from someone who's been in the trenches, me. And we'll also share amongst each other. But everything you hear in the class should be considered in light of your own personal situation, your own experience, your knowledge, your temperament, and your risk tolerance. Now, you're in 100% charge of what you choose to do with the information. All right. And everything in your life is really your own personal responsibility. And that's the beauty of financial stewardship is it's yours and you make it your own. So let's get started. Now, I'm really excited about the mindset portion because everything is about mindset. A lot of you procrastinated on opening your brokerage account because of mindset, right? Either a mindset of fear or lack of confidence or insecurity or just ignorance because it's like, I don't know what I don't know. So, mindset, it all starts from there. If you don't believe you can, you won't. I love the little engine that could. I think I can. I think I can. So that's a great place to start. Now, today, I am going to share parts of a story that I am pretty sure you all have heard before. And the best success book ever written is the Bible, and that's where we're going to start. And I'm pretty confident you have not heard this story in this particular light. So there are two versions of the story. There's Matthew 25:14 through 30, and Luke starting in chapter 19, verse 13. So, same story written by two different disciples of Jesus or Yeshua. Lots of English translations out there. My reading is from the Scriptures Bible, kind of an interesting translation because they went directly to the Hebrew Scriptures. Most Bibles went to the Latin Vulgate or Greek, but this one went directly to the source. So very, very Similar translations, but I love this one. So let's start in Luke 19, verse 13. He therefore said, a certain nobleman went to a distant country to receive for himself a rain and to return. Now, right off the bat, if you are a believer in the Bible and in Jesus, you're guessing, well, who's going away? Who's receiving a rain? Who's going to return to reign here on earth? That would be Yeshua, Jesus Christ. And that's the government I'm waiting for, because the governments we have now, don't count on them to do anything for you. For themselves, they'll do it, but for you, we need to take some responsibility. Well, he called 10 of his servants. He gave them 10 minas and said to them, trade until I come. Yeah, he said, trade until I come.
Huh.
If you ever thought that maybe trading was unbiblical, it's right there. If you ever thought, well, I'm a Christian, money is bad, no. The master is saying, trade until I come. And if you're thinking, well, they didn't have the stock market back then. Well, they did have a form of the stock market. They did trade. In 1602, Amsterdam had a version of the stock market in the 1600s. Going back 500, 800 years before Christ, ancient Greece and Rome, they did trading. Going all the way back, even thousands of years before Christ, Babylon and Assyria, they did trading. This is not a new thing. The technology we have is a new thing, but we're going to learn it together. So trade until I come. So he went away. He came back, having received the rain. He sent for the servants to whom he had given the minas. And I'm just going to stop right there. I'm going to go over to Matthew. He gave a mina. Now, what is a mina? A mina is actually about a 3 months wage. 3 months. Hold that number in your head. So, he went to the one that he gave 5 minas. Some translations say talents, some say silver, whatever it was about a 3-month wage. He gave to someone 5 talents. That's like 10 months' wages. That's almost a year's salary. And he went, see, I've gained 5 more. He doubled it. He doubled it. The master said to him, well done, good and trustworthy servant. You were trustworthy over a little. I shall set you over much. Enter into the joy of your master. So the master was joyful that this person was trading and doubled what was given to him. Then there was one that received 2 talents and said, Master, you've delivered to me 2 talents, and I gained 2 more. I doubled it. The master said to him, well done, good and trustworthy servant. You were trustworthy over a little. I shall set you over much. Enter into the joy of your master. Now the one who had received the 1 talent also came and said, Master, I knew you to be a hard man, reaping where you haven't sown, gathering where you haven't scattered seed. And being afraid, I went and hid your talent in the ground, and here, take back what's yours. The master answered and said, you wicked and lazy servant, you knew I reap where I have not sown, and I gather where I have not scattered seed. You should have at least put my silver with the bankers, then you would have gotten some interest. Take away the talent from him and give it to him who possesses 10 talents. To everyone who possesses, more shall be given, and he shall have overflowingly. But from him who does not possess, even what he does possess shall be taken away. All right, so if you continue to read this is Matthew 25, he goes on to talk about being generous. So we're not talking about greed and hoarding it as you read on. The righteous say, I don't know, we didn't see you hungry, and you say we fed you. We didn't see you thirsty, and you say we gave you something to drink. And then the master says, well, when you did this for the least of those, you were doing it for me. Proverbs also says that those who give to the poor lend to God. So there's so much to unpack here, but I want you to think what stopped the wicked servant. It was fear. And I think that stops all of us. I'm really proud of all of you because you broke through fear. And you know what? It's okay to feel the fear, but it's not okay to let the fear rule you. We have a different master. And I don't want fear to be my master. I want my creator to be my master. Now let's talk some more about what we've been doing with our money. Now, back then, there really was not as much inflation. Putting your money into a checking account, how much are we going to get? 0.02% interest? That's nowadays, that's almost like burying it in the ground, but at least you're trying. Certificates of deposit, your money is tied up and you're still not getting a whole lot of interest. Money is designed to be like seed. It's right here. It's designed to grow. It says here, everyone who possesses more shall be given, and he shall have overflowingly. Overflowingly. So I want you to think in your own life where you have stopped the flow of abundance. When I was a kid, we used to drink from the garden hose. And if there was a kink in it, we would not get the flowing water. So as you did journaling last week, think about where you've had those bottlenecks and where you want them unkinked, because we are going to do this over the next 12 weeks. Now, I want you to think that, I want to see how many he had. Okay, so somebody had 1 talent, and we said it's about 3 months' salary. Somebody had 2 talents, so that would be about 6 months' salary. I want you to think about the financial advice that you've been given for 3 months and 6 months' salary. You're welcome to type it in the chat if you can think of where I'm going. What do financial people, even Christian financial people, tell you to do once you get 3 to 6 months worth of money? What do they want you to do? Just type it in the chat if you think of something. Anybody have any ideas? Save it. Okay, so iPhone 6 says save it. Debbie says set up an emergency fund. Yes, don't we hear that all the time? Set up the emergency fund. I haven't found it in the Bible. There's nowhere in the Bible that says take your 3 months to 6 months worth of money and set up an emergency fund. I haven't found it. I've looked. I have read the Bible cover to cover more times than I can count. I even recorded the entire Bible from cover to cover on YouTube so I could listen to it when I didn't want to read. Haven't found start an emergency fund. Now, I am not saying that it's wrong to have some money set aside for emergencies. But why are people, even people that are Christians, pushing that when the Bible doesn't say it? That's a mystery. And I think part of it is we are so easily influenced by the world that we get worldly ideas and we try and clothe them in Christianese. All right, Debbie says security. Yeah, and we do want security, but who does our security ultimately come from? It should come from our Creator, from whom all good things flow. So let's talk about what we are considering is a biblical thing to do with our 3-month salary, building it up to a 6-month salary, building it up to even having a year's worth of salary. How good would that feel to know I got a big chunk of money and that's a year's worth of my salary? It's right in there. There's a plan to do that. Now, somebody might be thinking, wait a minute. I know the Bible doesn't say emergency fund, but what about Joseph? He had 7 years of grain. Wasn't that like an emergency fund? No, it wasn't. No. God did not tell Joseph, hey, just in case something bad happens, I want you to have an emergency fund. He didn't say that. He said, I am going to glorify myself through you, and I'm going to give you the interpretation of a dream, and I am going to set you up for my glory. I've got things in play, and you are setting money aside. Well, it wasn't money, it was grain. You are setting capital. You're setting reserves aside for one very specific purpose. And it's not some mythical emergency fund in case something that we don't know is going to happen just happens. It was very specific. And if you want to think of it from a trading standpoint, what Joseph had was liquidity. He had a hard asset that he could trade with. And he built it up and he waited for the right time when there was a drop in the market to deploy those funds. And when I say a drop in the market, it was literally the markets, like people could not eat. There was no food in the markets. And when people came to trade with Joseph, he got the wealth of everybody around him. He was trading. They were bringing stuff to trade with. They're like, we want some of what you have, and we'll trade this. We'll trade our cattle. We'll trade our slaves. We'll trade our silver. We will trade with you. So what are you going to set aside? Imagine if you have that 3 months. That's a great way to start. Build up 3 months worth of your wages to start investing. All right, start small. Maybe it'll be just, 1 week's worth of wage. Keep building up. But I want you to imagine whatever your yearly salary is, once you get it to that point, and you are trading, because it says trade until I come, that you have now a paycheck that you can rely on. Imagine you have, I'm just going to do round numbers because it's easy for math. What if your household income is $100,000 a year? And the first year, if you make 10% with your trading, and by trading, I'm not even talking about active trading. You can set it and forget it. You can set things up to be automatic. But let's suppose you're just getting a 12% return, totally doable. That means you're getting $1,000 a month. That means you're getting $12,000 a year. Now, does anybody actually have a quote unquote emergency fund set up that has $12,000 in it? Raise your hand if you do. You rock, Beth. That is amazing that you've had the diligence to not spend your money and say, hey, I got to do something better with it. But imagine if you just automatically got $12,000 a year and it kept growing and compounding. The end of 10 years, 20 years, 30 years, however long, that's going to grow. And what if an emergency came up and you're like, oh, well, I'm going to just turn off my automatic reinvesting. I'm not going to touch my capital. I'm not going to touch my original 100,000. I'm just going to let the cash flow help me with this particular emergency. You see, that's what the wealthy do. They don't go broke that way. All right, are some light bulbs going off because this is really about mindset. And again, I'm not saying don't have an emergency fund, but when you learn these skills and apply them and grow in these skills over our next 12 weeks, you're going to be looking at money differently. Having that in a trading account, and we're talking a stable trading account, there's a time and place for risk. It's like that garden hose that you used to drink from as a kid. The water just keeps coming, but we got to take out all of the kinks. All right, that's what we're going to be doing. So just imagine what we're creating is an abundant flow of resources that never ever has to be turned off. It's like going to your faucet, turning on the water, and it just goes and goes. So I find that really, really exciting. Trade until I come. So I hope that breaks down some barriers that you all may have had. Next thing we're going to go is into foundational parts to give you a support as we go into trading, but you guys are welcome to comment or ask any questions about this particular idea from the Bible. Has anybody ever heard anything like that before? Anybody find it exciting? Like we serve a God who wants us to have abundance. He doesn't want us to hoard things off in a corner. It's seed. And Grace's husband is a professional farmer. What good is the seed going to do to feed the world if you just keep it in boxes and never plant it? That would be crazy. And then what happens once you plant seeds? You get crops and then you have like millions more seeds. Everything that God does is about abundance. So that's exciting to me. That is exciting to me. And it is my prayer that after these 12 weeks, you can confidently go about the rest of your life without ever worrying about money again. Ever. Not because in 12 weeks you're going to have enough money to buy a yacht, but because you know that you serve a God of abundance and He wants you to have everything you need. And more than that, He even gives us more than we need. You know, He does give us special things. He is a good Father. Oh, goodness. Yeah, that blows me away. All right. No questions about that. We will move on to foundation. Now, this is exciting. Everybody here has been to school. Some people have gone to higher education. How many people would like a trick or tip to have a guaranteed B in every class you take? All right, one person, guaranteed B. And you can give this tip to your children, your grandchildren, your nieces, nephews. Grammar is 80% of a subject. Now, when I say grammar, I'm talking about vocabulary. Remember we used to have grammar school? I don't know, there's some young people here, you guys might not remember that. Grammar school was instituted with that concept in mind. And I think we would all agree, if we took a high school history test or science test from the 1800s, people with bachelor's and master's would miserably fail at that. They learned things in a different way. So memorizing the grammar or vocabulary of a subject, even if you don't understand it, you are practically guaranteed to have at least an 80%. Even if you just regurgitate the definitions of the subject you're studying. Memorize some definitions. And when you do that, when people talk about that subject, you might not get it at first, but you'll hear it and you'll like, oh, there's the definition. I don't know what the heck they're talking about, but I know the definition of that. And that is going to help open up your mind to learn things easier. So I gave you all 30 terms, just some basic terms to start with. And I would like you guys on your own after class to define those terms, look them up, write down some definitions that make sense to you. All right. And I'm going to give you a few little definitions that made sense to me. And depending on your personality, you might want a very specific dictionary definition, or you might just want something very general. So this is going to be your foundation, and I'm going to start with market terms. All right, market terms, ask. That you're going to see that when you buy your stock. Ask is basically, think about going for a garage sale. You're there, you find something you like, you say, what are you asking for it? What's your ask? And if you don't like it, you're going to barter or bid. So the bid is what someone is willing to pay for the stock. The bid and the ask are not typically the same when you see them on your dashboard. Sometimes the spread might be like 1 cent. Sometimes the spread might be a couple of dollars. But you have the ask and the bid. Now, liquidity can mean a couple different things. Liquidity, when referring to buying and selling stocks, means how easy is it going to be for you to buy or sell something? You're probably always going to find it pretty easy to buy or sell Apple. Everybody knows Apple or Tesla. Everybody knows about it. Everybody either wants to buy it or sell it. It's pretty liquid. You can get in or out of it pretty easily. Liquidity also can refer to how much cash you personally have on hand. Hans likes to call it T1, a tier 1 asset. Liquidity is how fast can you get some cash in your pocket to do what you want with it. Cash obviously is liquid. Your house is not. If you wanted to get the equity in your house, yeah, you can't just break a window and go to the store and say, hey, this is from my house. You got to put it on the market. You got to prepare it. Who knows how long it'll take to sell? A house is not a liquid asset. Now, the market, pretty obvious. That's the place where people go to buy and sell. It's in the market. You go to the supermarket for groceries. You go to the stock market for investments. Now, volume is another important term, and all it means is how much was traded. Volume specifically is the number of shares traded in a day. Volume also, when the market is open, lots of shares are trading. When the market closes, you can still put in orders, but it probably won't get filled because not a lot is happening. There's not a lot of volume, not a lot of activity. Okay, so we will go to the trading terms, and these, some will be more important to you now and some will be important later. Good terms to know. Bullish. You think the price is going to go up. Bearish. You think the price is going to go down. Long or short. Okay, typically long is when you're buying something and you are either going to hold it for a long time or you think it's going to go up in price as well. Short, you think a stock's price is going to fall, and also there is a technique where you can sell something that you don't even own. It's kind of like you can borrow some shares to sell, but you don't really own it. Now, Zappos, if any women like shoe shopping, Zappos did this. When Zappos started, what they did is they looked, the guy who started looked and he found an awesome pair of shoes on sale, like a $300 pair of shoes that he got for 30 bucks. He didn't go to buy that pair of shoes. He just said, hey, hold on to this for me. I'll be right back. He sold the pair of shoes that he found in his local area for 30 bucks. He sold it online, worth $300, sold it for $250. He didn't even own it. He got the money, got the 250 bucks, ran back to the store, and from that 250 bucks, he paid 30 for the shoes, wrapped it up, sent it off, made a profit. All right, so you can do that with stocks. It's crazy, but definitely risky. But when you hear that term, you'll know what it means. Now, stop loss. That's a plan to sell a stock if the price drops too low. A lot of times we typically won't use this with our strong dividend producing stocks or our dividend kings, dividend champions. If you don't know what that means, there are companies that have been increasing their dividends for nearly 100 years. There are companies that have been increasing their dividends for 50 years. These are companies that are probably not going to go out of business. You probably don't want to stop loss, but if you are getting more advanced and you're trading and you're doing some riskier things, you might want to have a plan that if all of a sudden the value of the stock drops like 30%, you might say, hey, if it drops to 30%, I'm selling it. I am not going to lose more than that. So stop loss, when you hear that, you'll know that's a strategy where you're going to limit your losses. Now, margin. If you look at your accounts, you have the ability to apply for a margin account. And I have margin in my account. I love it. It's kind of like having a home equity line of credit or a credit card. You can borrow it. You can borrow it to do anything you want with it. You're going to get charged interest. But what I like is sometimes if I want to buy or sell some stocks, there's something I want, and I get rid of some stocks and I sell it, I might not have all of the money I need to buy the new stock. As Beth figured out, sometimes it takes a day or two for certain funds to settle. And there are times where the margin account allowed me to buy some things that I had the money for, but the funds hadn't quite settled yet. So it's basically credit. Now, investment types and metrics. Somebody asked me the other day, they said, I don't even know what a dividend is. All right, a dividend's your cash flow. A dividend is when you have a stake in a company, a stock, a fund, you get paid. And really, that's the big deal that we're really going to be talking about over these 12 weeks. Let's get paid. The next term is called ex-div. Now you want to look at these when you're buying or when you're selling stocks. This is a date that you're going to see, I'm going to show you, that says, hey, if you have not owned this stock by this date, then you're not getting paid for holding it. So again, that's something you want to look. If you buy a stock after the ex-div date, and then you find out, oh, they paid their dividend, and you look and you're like, where's my money? Well, you have to get it in the right time frame. ETF is an exchange traded fund. It's basically somebody came up with an idea of a bunch of stocks they wanted to bundle together that you could buy it like a single stock. So exchange traded funds, just a term. Futures, you're going to hear that term a lot. The futures are basically when people agree to buy or sell something later at a specific price. All right, sometimes you might tell your children, no, we are not getting pizza or ice cream during the middle of the week, but we'll do it on Saturday. We'll go out. I'm going to promise that we're going to buy it later as long as it's not more than a certain amount. All right, index. Index is another important term. It's a group of stocks that show how a particular market is doing. The S&P 500 is an index. Okay, it's one of the most popular ones. It's the top 500 companies. Now, if you're number 500 in the S&P 500 and you're not doing so well, you'll drop off and another company will go in its place. So it is not always the exact same companies. There's also the NASDAQ. That's another group of stocks. The NASDAQ is an index. All right. Next, the NAV, net asset value. There's been a lot of talk about NAV and NAV decay in the True Wealth Formula group. And basically, it just means, what's the value? What is the value of this fund minus the debt? All right. kind of like your net worth. Your net worth would be the value of everything you own minus your liabilities, minus your debts, minus your mortgage, minus your car payment. So you can think of it kind of like net worth for a stock or a fund. All right, portfolio management, asset allocation. You don't want to put all your eggs in the same basket. That's basically it. So you might have some money in oil companies and some money in oil companies, technology, real estate funds. You want to spread it around. And also within something like REITs, R-E-I-T, Real Estate Investment Trust, you might want to have a few different companies. So even within the same asset class, you still might want to diversify. And that brings us to diversification. You don't want all your eggs in the same basket. You want to have a variety. Portfolio. You guys all have a portfolio now. It's the investments you own. Even if you have just one stock in it, you have a portfolio. Risk tolerance, that is something, however you define it, you're going to have to learn to control your mind, because you're going to see the value of your portfolio go up and down. You will see yourself losing money, but you're not really losing it until you actually sell it. We're going to talk a lot about this over the next 12 weeks, to be comfortable with the roller coaster that's the stock market. And if you can get the mindset that you're happy when you wake up and you see, wow, my whole portfolio dropped by 20%, that's when things are on sale. So if you can wrap your mind around it and not be like, oh my gosh, I lost 20%, but say, hey, everything's on sale now, that's going to be great. When the stock market goes up and you gain 20%, you can be happy about that, but you're not really going to be finding the bargains. So risk tolerance and not getting emotional about your investments and your stocks will serve you. Technical analysis. Now, technical analysis is what you're going to see on a chart. You will hear terms like support. And basically, when you see all the bounces up and down, you can draw something called trend lines, and you can see where the stock, it just doesn't seem to get below a certain price point. It's kind of like the floor. It's not going below that price point. You see a trend. Resistance is kind of like the glass ceiling. Women say, oh, I can't get promoted. There's this glass ceiling. I can't go beyond here. Well, that in stock terms is called resistance. It's where the price just hits this invisible glass ceiling, and eventually it'll break through. It will break through the ceiling or the floor. You don't know when, but as you learn to take these guesses and see where it goes, those are going to be opportunities for you to make some money. Trend, that's pretty obvious. You will see, hey, I keep seeing the stock price go up. There's a trend. MA. All right, if you hear MA, DMA, SMA, that all has to do with moving averages. You'll hear things like the 20-day moving average. And basically, if you take a stock or a fund and you see the price over 20 days and you add all of those 20 days up. Usually it is the price at the end of the closing day. You add that up, you divide it by 20, you're going to get the average. So there's a 20-day moving average, a 100-day moving average, a 50-day moving average. And there will be times that you're going to want to look at that as you get deep into trading. And again, I want to say, don't let this overwhelm you if you're not there yet. We're just memorizing, getting familiar with vocabulary, even if we don't understand it, because eventually we will. But seeing the averages will help you determine where you think a stock is going to go. Now there's something, it's called, all right, I put a few more notes here on my averages. All right, so MA is moving average. That's in your terms. There's also something called a DMA. That means a displaced moving average. I used to think it was a daily moving average. The daily moving average is actually SMA, which means simplified moving average. So you see how these can get confusing. And once you have the terms memorized, when you hear them, things will be clearer. Now there's something crazy called the MACD. They call it the MACD, and it means moving average convergence divergence. And that's a mouthful, so they just call it the MACD. And it is a combination of 3 different bits of information. And it's a tool that people use to help them guess, is the price of a stock going to go up or down? The components in there, there's something called a histogram. And I think we'll be able to get to it today. I can show you a picture. It's usually at the bottom of a chart, and it's a bar chart. A histogram is simply a bar chart, and you'll see these bars going up and down like a bar graph. There'll be a signal line, which is another type of moving average. And if that line tends to, if the signal line tends to go above the moving average, you might want to think about buying. You might be getting some good deals. If that little line tends to go below, hey, maybe you're going to want to sell something. So the MACD, when you hear it, it's basically a whole series of different tools mixed into one to determine what's going on in the market. And I know it's fun to say. A lot of people like to use it. It hints at whether we're going to enter a bullish or bearish period. And one of the important things it does is it measures momentum, how quickly the price is changing. So again, people like to use these tools. It helps them guess. There is absolutely nothing that's going to tell you the future. And finally, our final 3 terms. Oh, I forgot relative strength index. This is a term you're going to hear a lot. The RSI tells you whether a stock is overbought or oversold. What does that mean? That still sounds confusing. Okay. Write these down again, just to try and memorize one new term a day. Oversold. If something is oversold, it tends to be a bearish environment. Prices are going down, prices are dropping. It's oversold. I don't know, have you ever had too much stuff in your pantry and you just want to get rid of it? It's not worth anything to you. You're having your garage sale, you're putting everything out there, you're dropping prices, and people are coming to buy. That's the trend for oversold. You can buy stuff on sale. Overbought, that is the complete opposite. The price tends to be going up if it's overbought. That's usually a signal to, you might want to sell if you're going to make a profit. You might want to hold. Again, these are, I have to admit, weird terms that we just need to start to memorize. Number 28, unrealized gains or loss. I love this. I love this because I'm going to show you an example with one of my own portfolios. But if you have looked at your portfolio, you might see things in the red and you might say, oh my gosh, I lost so much money. No, you didn't lose anything because you haven't sold it. It's an unrealized loss. You haven't made it real. It's just sitting there. Same thing with gains. You might go and say, woohoo, I just made 10%. Everything went up. Well, it's an unrealized gain. You haven't made it real. You haven't sold it yet. Volatility, and this is where money's going to be made as well. Volatility is how much the stock price goes up or down, like a roller coaster. The investments that tend to pay a very high dividend tend to be extremely volatile. The stocks that are very stable, like Lowe's or Johnson and Johnson, they're going to pay like a 2 or 3% dividend because they're super stable. The more volatility, the more opportunity you have to make money. And finally, the VIX, VIX, Volatility Index. That's the same thing. It shows how much the market is jumping around, kind of like a meter or a gauge as to how bumpy this ride is going to be. So it is the VIX, it is volatility, and if you're looking for deals when there's a lot of volatility, a lot of times that's an opportunity to strike while the iron is hot and get some deals and really amp up your portfolio. So there we are for that segment. And the final segment, I will be sharing my screen and I'll be showing you, I don't know how far we're going to get on this, but I'm going to log into my Schwab account and share my screen so that we can get an idea of how some of these play out in a real portfolio. Okay. All right. Hey. Any questions before I move on? Oh, all right. If you can see my screen, give me a thumbs up. Okay. All right. Oops. All right. I am going to, this account is a combination of a joint account that my husband and I have, my personal Roth, and I opened a regular IRA as well, and I decided I will probably never ever use that. You can open up multiple accounts for different purposes. So I'm going to go over here if it's working. Okay. And I started this Roth in December. So it's been open for a very short time. And as you will see, this particular account is kind of like my testing account. I have accounts for different purposes. There's another section with Schwab that has our joint account and some different IRAs, different things like that. You can choose when you start to have more money, you can choose to have separate accounts for separate purposes. The joint account is set aside to pay a tax bill that we have coming up. This Roth IRA is just for me to test out strategies. And if we look at it, it says today, right over here, it says that the account dropped by over 6.5%, and I lost $1,108.75 today. So I want you guys to think, if you had put about 16,000 in an account and you opened it up and you're like, oh my gosh, I lost over $1,000. Well, I did not lock in that loss because I'm expecting it to go back up. And I bought particular stocks to give me cash flow. Now, there are other stocks I've bought in different categories that I expect to go up in price or that are stable. So this is just some ideas with you on how to manage what's going on. Now, I want to show you some things that you can do in your account with Schwab. So if you look over here, I have YMAX. If I click on the down arrow, I can click on charts to get a chart. It's not a fancy chart. You can click on lot details, and this will show, you might want to see how much did I pay for a stock. Right now, you'll see here the price of that stock is $13.35 on the market right now. I paid $13.82 here. I paid $13.44 here. I paid $12.48 here. All right. So this is an opportunity for you to review what you have spent on a particular stock. It also shows here, you'll see this 2.4992. I did not buy that. I told them to reinvest my dividends, and it was bought automatically for me. Now, here's another important factor for you to consider. It says right here, my cost basis is $4,224. I did not put that much into it. but it counts the dividends. So I don't know if that makes sense. That confuses a lot of people at the beginning. The way that it sets up your gain and loss and cost basis, it's if I went to my bank and I said, I'm going to transfer $33.59 to Schwab to buy this stock. I didn't do that. It automatically did it for me. And I like to keep track of what I actually put into it. When you look at it that way, my loss is not as big as it appears to be. Okay, so does that make sense? Sometimes you're going to see, oh wow, I lost $148. Well, no, I mean, I never had that $33.59 to begin with. That was a dividend. I never had that 38 to begin with. That was a dividend. All right, so right there, that's almost 80 bucks. I didn't have this 13.97. All right, that's almost 100 bucks right there. And then here's like all these here are dividends. That's like 100, 160, 200. So when I add up the dividends, I actually haven't lost anything. Okay, it says my gain loss is 3.5% and $148. But no, it's really not. It's like the dividend was cash. It wasn't my money. Does that make sense? Okay, so even when you see these numbers, you're going to take into account were dividends reinvested for you. Another important thing is you're going to want to look at your transaction history all the way up here at the top. You can go to filter by transaction types and deselect all. And sometimes you're going to want to say, hey, I'm going to click on dividends. I want to know how much my dividends are. What did they pay me? I got $65 from WiMAX. I got 22 bucks from Eagle Point Credit. Like all this was like in the last week. 9 bucks from Ellington. Now I'm going to encourage you guys to keep track of your dividends. This is your money. This is your paycheck. All right, so there were a few more things that I wanted to get through tonight, but I want to honor your time. I want to prepare for next time, and I just want to give you a little peek. I'm gonna stop sharing. Okay. Now there's one sheet that I gave you that looks a little something like that. Okay, so Grace got it. Did Beth, Debbie, did
Got
you?
it. I got it.
All right. All right. Now, you don't have to use this. Make up your own. But basically, what I do, you'll see I have categorized my Roth, my husband's Roth, my husband's IRA, our joint account. I have a few there so that I can keep track daily or weekly what is happening. And it's pretty self-explanatory. You know, you can fill it out. Sometimes it helps to see what's going on. I like to track things, find a way to track things. And basically this year, when I started tracking things, I'm going to give you some numbers. And in your own mind, you can add zeros if you want. But earlier, I have one account. It went from $563 to $622. That's up almost 60 bucks. And then it went down to 594, then 593, then up to 599, then to 604, then to 610, then to 606, then down to 589. So it's kind of crazy if you have around $600, if the stock market is being really volatile, you could see, oh my gosh, I just lost this 60 bucks, or I just want you to see how volatile it can be. And then I want you to imagine, because you're going to get there, what if that was 5,630? And then it went up to 6,220. Or what if it was 56,300 and went up to 62? When you get up into the bigger numbers, it gets kind of scarier if you think, oh my gosh, I lost 20,000. You haven't lost it until you sell. So get used to being happy in every situation. All right, I am going to stop here and open it up for questions. Next week, we're going to talk a little bit about the trading ticket, on how to lock in sales, how to do some aftermarket trading. And by trading, I don't mean like we're day traders. I just mean that we're going to buy or sell based on our own strategies. So there we go. So I'm going to open it up to any questions, any comments, anything you want further explanation with, or just to share victories.
I'll speak up.
Thank you,
You
Debbie.
kind of lost you kind of lost me on that cost basis when you were
Okay.
showing the Schwab. I mean, you're showing some stuff that I didn't now I know how to read it a little bit more in depth, but I didn't get what you're talking about, that cost basis. Is that the amount of shares that you were paid, but they reinvested it back in?
That is a great question, and it can be confusing. So I'm so glad you asked that. So for cost basis, let's say that um, let's say I put $1,000 into an account, and let's just say whatever kind it is, I put $1,000 in, and it's going to go up and down. For me, personally, I like to look at my personal cost basis. And I know that I put $1,000 of the money that I worked for into that portfolio, bought a couple of stocks. So for me, in my mind, my personal cost basis with money from my hard-earned paycheck is $1,000. So if the market goes up or down, or I get dividends or not, I look at it as I put $1,000 in. That's my personal cost basis, and I can see the value of the account, whether it is gaining in value or losing in value. What Schwab does, and most investment companies will do, is they'll say, on day one, your cost basis is $1,000. But over the course of, let's say, a year, I didn't put any more money into it, but I kept paying dividends. I kept getting dividends. Let's say I got, by the end of the year, let's say I got $2,000 worth of dividends. Schwab will say my cost basis, or 200, sorry. I put 1,000 in, I got $200 worth of dividends. 1,000 was me, 200 was dividends. The total amount of money that was put into the portfolio is 1,200. Schwab will say, that's my cost basis, 1,200. I only, does that clarify it a little bit better?
Yeah, yeah.
Yeah.
Just comparing from your baseline, how much you put in. So if it's in the red, if it goes down to like 800, it's going to be it'll be in say it goes down to 800, is it going to be, what would the number be? You put
Um,
1,000 in, you lose 200, so it's going to be 800 in the red? Is it going to say
200,
$800 or
200 in the red.
200 in the red?
Yeah.
Okay.
If you put $1,000, if you bought $1,000 worth of stocks and then you took a peek in it the next day and you're like, oh, it's only worth 800 now, you'll be 200 in the red.
The cost basis will show as 200.
Yes,
Okay.
yes,
Okay.
right.
Okay.
So yeah, but then at the end of the year, if you look at your account and you've gotten dividends, and if at the end of the year the value is still $1,000, but you've gotten dividends, you'll see that you're in the red because the dividends were repurchasing things. So basically, just remember Schwab will show you the cost basis based on your money plus the dividends you received. I like to break it out on a piece of paper and do my personal cost basis. Schwab will do my cost basis plus the dividends together. But sometimes I want to break it out and see what happened with my personal money. Does
Yeah.
that, is that,
Getting there. Getting there.
all right? So yeah, so basically when you see, when your money has been there for a while and you see that it looks like you've lost money, it's really not as much money as you think because you were getting paid dividends.
Right.
So that's a great question. And it is kind of a weird
Using.
concept because I looked at it and I was like, I know I didn't lose that much money.
Right. Well, because you still have the dividends at the end of the day
Right.
and
And
you're holding on to them. Yeah.
that will offset the losses that it looks like are happening. Plus, now you have more shares if it's
Hmm.
being automatically reinvested. And
Right.
over the course of time, because this is a long-term, process, over the course of time, it's there will come a point where you will not have to worry about unrealized losses because you'll have gotten so many dividends.
Yeah. Yeah, it'll eventually outweigh itself.
Yep, yep. Yeah, you'll double your money, just like they did in the Bible.
Yeah.
Right? I had 5 minas, now I got 10, it's doubled. Yeah, once. So,
Yeah.
thank you, Debbie.
Yep.
Beth, you look like you have something to say.
I was just thinking about Grace's message and how to like frame her first dividend. I think that's a great idea. I think it'd be very motivating. But that's kind of what with your when you're tracking and charting too.
And you're going to be getting a dividend next month too. That's going to be exciting.
Yeah, I'm looking forward to that. And I loved how you started with the scripture that said, "You prayed until I come," because I've never heard that, and that's in Luke 19:13.
And also Matthew 25.
Yeah.
Yeah, the same story in both.
Yeah, I remember reading them verses and never looked at it that way.
That's crazy. I know. Me neither.
And it's plain English.
Well, when I was trying to listen to Hans, that part of my problem, and I shared this with you, was it was like he was speaking a foreign language. I could not understand anything. So the basic investing terms is going to be excellent place to start. And so I can go in with fresh ears once I understand some of these terms.
Definitely. And even don't even worry about understanding them yet, but memorize the definition.
Okay.
And the understanding will come.
Mm-hmm.
Yeah, that's true. Because when I came in a year ago and I'm listening to Hans and I'm like, you are speaking total Japanese. But I started jumping in on my own and picked up a little course and started, well, explain to me what this is and explain to me what this is. And so it starts to make sense. But also, it's still worth the money because had I not invested that $100 a month, I wouldn't have known anything about this 20% correction. And then to go in and buy that, I understood. But it does take time to learn it. And he does talk good. That's why I like Larissa. She can speak in high school language.
It's like a normal person.
Yeah.
Oh, very cool.
Thank you, Larissa. You've done a good job.
Thank you. Thank you. You look beautiful, by the way. Are you back home, Beth?
No, I'm still in Oregon. I'll be flying home in the morning. Yeah, so I'll be home back in Texas tomorrow.
Awesome. Well, safe travels.
Thank you.
And Sarah, she did say that she was traveling with her family and she wasn't sure whether she could be on. So I'm glad we're recording. And Sarah, I'm glad you're watching. I'm glad you made it to the end. But I definitely would love to hear from Grace and Andrea because I'm so happy you guys are here.
No, I just want to thank you for the promptings, the loving promptings to go ahead and log in. And
Yes.
yeah, I needed those little nudges. And it wasn't as bad as I thought it was going to be.
Do you want to share anything at all? Or do you want me to share for you?
You can share because like whatever you feel is like really important because I mean it's such a
Well,
long
it's your
story.
heart. It's your heart, Andrea, and you're always welcome to share anything you want. And I'm blown away, and I'm praying for you guys because all of you, took the chance to step out on faith, and to get into something you weren't sure of. Even Debbie's like, I don't even know what Hans was talking about, but I was just putting $100 in every month. And that's a huge step out in faith. And you are the leaders in your family. You are the leaders in your community. And this is so needed because I believe God wants us to have freedom, and money is used to enslave us when it should be used to keep us free. So, as I said before, make sure you download it when I give you the link. Zoom is not going to keep it on, like maybe they'll keep it on for two weeks, but download it, share with your family, whatever. I want to share about Andrea. She really pushed through a lot of money trauma. And like, we all have trauma about things in our life, and we probably all have some form of money trauma. And I'm 100% sure every single one of us has said at least once in our lives, well, we can't afford that. Okay, can God afford it? Yes, he can. So we can afford it too. But the thing is, we're going to choose. We're going to make a choice on whether we're going to spend resources for this or that. But Andrea was a former client of mine. Originally, we were going to just focus on finances. I'm like, I'm your girl. Let's do finances. I mean, I can, the one-on-one coaching, I can coach on anything because it's just drawing the things out of you. And Andrea was like, no, we're going to go in this direction. Completely avoided the finances. Completely. So much trauma there. And I spoke with her yesterday and I'm like, what's up with the brokerage account? Like, I don't know. I feel like it's been since last year, I've been telling you to open the account. And I'm like, in my mind, I'm like, girl, okay, no more excuses. Like all the excuses last week, their excuses. I'm like, no more excuses. Get it done. It's going to take you 15 minutes. And just this is the final line. We're having class tomorrow. Get it done today. 15 minutes. Well, it turns out she already had an account. Right? And it was a TD Ameritrade account, but already had it, already had money in there, already had stuff on drip. And I'm just really proud of you for breaking through that step for you. And I was definitely praying for you. And there was money in it. Everything was on drip. The whole drop, like you were completely oblivious to when the market dropped and went up, but it didn't matter because everything just was status quo. And there was a lot of money trauma, I think, some unworthiness, some rejection, and just to see that is broken through in a big way, and that you're here now and you're ready to tell your money what to do instead of hiding it from fear. So we've broken through that, and God's taken care of you. The perfect father has always had his watchful eye on you and all his daughters. So I'm blown away by what happened. Can you imagine that? Like avoiding it for all this time and then being like, oh wow, I did have something in there.
Yeah,
That's-
and and it, so I think I opened it and I looked back to the history and I think I opened it in like February of 2019. So I think it was like right before COVID hit. So
So it had up for you then.
I think so. I haven't looked at the numbers yet because I'm not ready to like see the red yet and understand how much I might have lost. But I had been since 2003, so I guess it's been 22 years, kind of on and off for maybe 15 years. I was with UBS Financial, and I had a really not good experience with them for over about 15 years, and it was just great when I called Schwab because it was completely the opposite. He was like this guy Scott was like the sweetest, like he was like a grandpa.
Yes.
You could just see him in his like little office and he explained everything to me. And he just said like even Schwab and TD Ameritrade in the 70s, they wanted to give people their power back. So like when I was with UBS, I kept getting excuses. I always felt defeated when I hung up the phone with them. Like I never got the answers I needed. I was losing money and I had a financial advisor and I just, yeah, they weren't helpful at all. And then I go into, Schwab and he says that they want to help people get their money back. And I was like, this is the complete opposite experience that I had. before, and he like walked me through every step. So it was just because I wouldn't take the action until she pushed me out of the Larissa pushed me out of the nest, and I just had to open the wings. So thank you.
Awesome, awesome job. And the amazing thing, Andrea, and the blessing is when I opened my account and COVID hit, I panicked. And I had stop losses, and I just told you guys, for dividend producing stocks that are stable and not speculative, you really don't need a stop loss. Like, I didn't know. I bought high and I sold low. When everything was dropping in COVID, I sold a lot. But you, Andrea, were completely oblivious. You didn't touch anything. And everything that went down, it came back up. So it's a good thing. It's a good thing right back then that you didn't touch it, because that would have been terrifying. So it all worked out.
You can just see the relief on her face. Ah,
Oh, good. And yeah, I'm so excited, and finding out that story before we even have our first class. So crazy. All right, Grace, I want to give a big thank you to you. I started my Faith Freedom Finance group way back a few years ago because Grace gave me the encouragement. She was really the wind under my wings, and I feel like I need to watch Beaches now with the. But you really have always been there, and so I'm super grateful, because so many stories and victories have come out of that group, and I think this is going to be the best one yet. This beautiful group of people. So thank you, Grace, and
I'm just so thankful for your faithfulness, Larissa, and for how you are investing in all of us just to get out of debt. And now, what do we do when we're almost at that finish line? And I just feel like you've listened to the voice of God and you've come through, and it's a blessing for all of us.
well, thank you
Yeah.
so much.
So thank you.
Congratulations on your very first little paycheck there.
My
And
little one, I printed it so that I could frame it.
I love
Brad
that.
just thinks it's funny. It's 94 cents, but it's still something.
Hey, small beginnings.
I do have a question.
Yes.
And I think you'll answer it. Excuse me. Do you ever buy stocks that don't reinvest for you?
Sure.
Okay.
Great question. I'll give you some specific examples. Now, the stable stocks, the hardcore companies that have been around for ages, definitely reinvest all day long. The speculative stocks, and right now, you saw in my little Roth, I've got MSTY or Misty, I've got YMAX, and I've got Winter WNTR. I am not reinvesting those. I want the cash flow. And I want to take the dividends that those stocks are going to give, and I want to buy those stable dividend kings, dividend champions, and let that be reinvested. Does that make sense?
Totally makes sense.
So
Yeah.
that's one strategy for not reinvesting stocks. And I have another strategy for, actually, I've got three strategies. So that's one strategy. The other strategy for not reinvesting is there are some stocks, and again, everybody says invest in what you know. You're not going to know everything about anything. So there is some limit to that, but I bought Rail, RAIL, Rail. I'm not telling you to buy it. I don't even think you should write that down. I found out my son loved railroads. We were always going to railroads. I see railroads all over the place. We'd stop at railroad crossings. We'd step off to the side, watch the trains go by. And I don't, from growing up around railroads, I don't think railroads are ever going to go out of business. I don't think they are. I think there's always going to be a value to it. So I think at one time Rail was trading at like $3 a stock. So I bought 100 shares just for fun. I'm like, and it didn't give a dividend, and then it gave a 0.25% dividend, and I'm like, whatever, I don't care. And I waited until it like doubled or tripled, and then I sold it. And then it went down again. So then I bought some more. So that's kind of like a swing trade. I don't care. It doesn't even have a dividend. Another was a company called Alcoa. And the more that you become readers, I think that really opens up your mind to ideas. And Alcoa had I was reading some business books, and Alcoa really changed their business model for safety. They became like the #1 safety company in the world, and they deal with aluminum. I don't know about you, but I don't know anybody who doesn't have aluminum in their house somewhere for some reason. So I'm like, I don't know, I'm just gonna buy some stocks. I don't know. I use aluminum. Let me buy a few just for fun. And then that went up, but it wasn't paying a dividend. So I'm like, well, then I'll sell it. So give yourself the freedom to learn about a company and buy some. My husband goes to Lowe's and Home Depot all the time. They pay a 2% dividend. I don't think they're going out of business. But you know what? I was like, my money can be better off with a different stock that's going to pay a better dividend. So there's all sorts of things you can with the dividend, reinvest it, take the cash to pay some bills, take the cash to buy a different stock, or experiment with a stock that doesn't even pay a dividend.
Okay. I bought 3 kinds of stocks, and this was before I understood what a dividend was. So 2 of them pay dividends and 1 doesn't. And then I've been looking at it thinking, what do I do with that if it doesn't pay a dividend?
Okay.
So-
And this is, do you know what you want to do with it now?
I think I'll just let it sit there. It's a mining stock in Saskatchewan here. It's a mining corporation, which is becoming more and more popular in Saskatchewan. So when I realized it didn't pay a dividend, I thought, well, if I watch it, eventually it might go up in price. And then that would be a stock that maybe I would sell at some point.
Okay. That strategy is called speculation.
Okay.
Maybe it's going to go up.
I think it's called an accident because I didn't know what a dividend was when I bought it.
No, and that is absolutely perfect. Nobody knows at the beginning, and I applaud you for doing that because that's the only way to learn. And
Mhm.
everybody here needs to get comfortable with making mistakes or potentially losing money. Do not, there's an opportunity cost. So there might be a point where you're like, oh, this thing is doing nothing for me, but if I sell it now, I'm going to lose a couple of bucks. And it's very easy to hold on and be like, well, I'll just hold on to it for another 10 years just so I don't lose $2. You also lose an opportunity cost. You could sell it and lose a couple of bucks immediately, but put it into a stock that is paying a good dividend, and you're going to make that loss up. So
Okay.
those are considerations. And the thing that I did not mention about the little thing that I showed you with the chart We can go over it tomorrow. I told you I put, okay, I have a Roth, my husband has a Roth. I categorize everybody's accounts, but I'm giving each account a purpose. One account is going to be the account that I want cash flow to pay my bills. Another account, that's our joint account. A Roth account, my husband's Roth account, I want that for our safety. I want that for stability. I want that to grow. Another account, I'm calling it our dream account. I want that account for our fun and our dreams. Okay, so at this point, maybe you don't quite have a big nest egg. Maybe you do, I don't know, but you could consider having a couple of different accounts for different purposes. You don't have to do that. I did not do that until a few years in, but we do want to be telling our money where to go, and we want to have strategies for what we're doing. And Grace, you had a learning strategy. You had an experimental strategy. So when you guys figure out what you want to do with your money, that is going to help you determine what you're going to buy. And even in a single account, you could say, I want 15% of my money in this account to go towards speculation and learning. And then I might have 50% towards, safety. I want those, those companies that have been around for 100 years or more. And then you might have some high yield accounts that are a little more volatile, a little more risky, but they're going to give you a nice paycheck. So you're going to determine that on your own. Does that make sense?
It does.
Okay. So good job. All right, ladies, we will wrap it up then if there's nothing else. Super proud of you. I can't wait till next week. You all have my phone number. You know how to reach me if you need anything.
Thank you.
Thank you, Larissa.
Thank
Thanks,
you.
Clarissa.
Thank you.
Good night, ladies.
Night.
Good night, everybody.